Assalamu alaikum and welcome to another video from us here at Nisba, and today we're going to be discussing Wahed, what they do, how it works, and why we don't use Wahed ourselves. There's quite a lot to go through, so I'm going to try and keep it at an interestingly fast pace, but hopefully it's going to answer everyone's questions. So this is a screenshot of the Wahed app, and this is a homepage. We've got no money into it, but that doesn't stop us showing you how it works. So what you do after you download the app, sign up, you'd want to add money to your Wahed balance, and you'd want to click add account. So after you click add account, you're presented with a few options. You're presented with a normal general investment account, the stocks and shares ISA account, which is the one which allows your returns to be free of any tax. So that's usually the one to go for, or the SIP account, which is the pension account, which does have some tax advantages. But we're not going into the account types today because that's a topic for another day, another video. So what happens when you select an account, which select general investment account? This is the point where you see the different levels of risk there is within Wahed. So you see everything very conservative, moderate, moderately aggressive. And this is effectively where you pick your level of risk. And this is a point where you should try and stop and understand, okay, what is Wahed actually doing? What is going on here? Well, Wahed is a Robo advisor. It's a platform where you choose a level of risk and they choose all of your investments for you. It's a bit similar to other platforms out there that are not made for Muslims, like Nutmeg and Wealthify. I think even Monzo have a Robo advisor on their platform, where it takes all the hassle out of choosing which specific investments or funds are correct for you, and they do all the work for you. And because of that work, they charge you some fees, which is quite normal when you're investing. But let's kind of break it down to see how it works. You find a lot of people get wrong is they get this stage quite wrong. They get the what level of aggressiveness they want wrong, and they might go too conservative or too risky. But let's firstly see how it works. So you choose a level of aggression. Now we're just choosing very conservative just to see what's in it and what it's like. So you can see, if you scroll down, you can see the allocations. You can see here that it's 99% in Sukuk and 1% in cash. We can click here to see what Sukuk funds this specific level of risk is invested into. And you can see it's invested into two Sukuk funds, the HSBC Global Sukuk Fund and the Franklin Global Sukuk Fund. So we can see for very conservative portfolio with Wahed, when you select it, 49.5% of your money will be in the HSBC Global Sukuk Fund. The other 49.5% will be in the Franklin Templeton Sukuk Fund. Let me try and see if I brought it up. Yes, I did. 49.5% in the other Sukuk Fund and 1% of your money in cash. So hopefully that makes sense. You can see exactly where they are investing your money for the very conservative risk profile. So let's go back and select moderately conservative. And again, we're going to see how the portfolio changes. And you can see there's quite a few changes already. Before we were 99% in Sukuk, now we have an allocation to global stocks, some in gold, some in emerging market stocks, and still a little bit in cash down there. So let's open out the Sukuk section in moderately conservative, and you can see they have the same two Sukuk funds as before. So they're not changing them, but they are changing the percentage allocation to Sukuk. So I imagine instead of 49.5% and 49.5%, they're now splitting the 65% over the two of them. So it's 32.5% each. And they've also got some global stocks, and you can see what funds they've chosen for the global stocks allocation. Let's see here. They have the HSBC Islamic Global Equity Index Fund, IC version. They have the HSBC World Islamic Fund, a Wahed FTSE USA Sharia Fund, a HSBC Europe Islamic ETF. So you can basically find out exactly what they're buying for each level of risk within Wahed. And these funds aren't special to Wahed. You can buy them anywhere. And this is a moderately conservative portfolio. Let's skip through to very aggressive and see what that's invested into. You can see 89% in global stocks, 10% in EM stocks, and again, 1% in cash. And again, we have the same kind of funds here. The HSBC Global Equity Index Fund, HSBC World Islamic ETF, Wahed FTSE ETP, iShares World Islamic Fund, HSBC Europe Islamic ETF. What's interesting is, even though Wahed is a platform, they actually put some of your money into their own fund. They put your money into the Wahed FTSE USA Sharia ETP. rather interesting story about that specific Wahed fund is that Wahed was actually fined back when they made their Wahed fund for a couple of reasons. Let me just load it up. Yeah, so Wahed was fined a couple of years ago, not specifically because of that fund, but they did make that fund, and they started putting people's money into their own Wahed fund without getting consent from customers for their assets to be used to fund their ETF. So that caused them to get a $300,000 fine. But that was back in 2022, and they paid the fine for that, and they're over that issue. But it just helps you understand a bit more about how it works. So hopefully that part all made sense. We can see exactly what allocation Wahed has for each level of risk, and we can see exactly the fund that they're investing into. So you now have the pieces of the puzzle as to what Wahed invests their money into. Now let's try and put it together in a nice chart. Now, wouldn't it be wonderful? Wouldn't it be wonderful if I had already made that for you? Oh, and you bet I have. So let's put it up here. Here we go. Wahed. So here we have the Wahed portfolios from conservative all the way through to very aggressive, the allocation to Sukuk funds, the allocation to equity funds. Now I'm not breaking down what specific equity funds they invest into, what specific Sukuk funds they invest into. I'm just breaking down the asset classes that they're investing into. And we also have cash and gold. So they always keep the cash level at 1% throughout every single portfolio. And that's because what we'll see later is their fees are 1% per year. So they need to keep an amount of your portfolio in cash so they can take their fees. The next thing you'll notice is that the Sukuk allocation decreases as you increase the level of aggressiveness. I hope aggressiveness is a word. And they increase the level of equity exposure as we increase the level of aggressiveness. And gold starts off small, gets a bit higher, then goes back down again. Gold really follows no rhyme or reason or pattern here. Now, just to compare this to another platform, Simply Ethical is another company who also do these kind of robo advisory portfolios where you select your level of risk and they do the rest for you. They have a slightly wider range going from defensive to progressive growth. So they have 1, 2, 3, 4, 5, 6, 7 levels. Whereas if we go back to Wahed, they only have 1, 2, 3, 4, 5, 6. But you can imagine all that's going to happen is that instead of this allocation being jittery like this, it's just going to be a tiny bit more smooth because you have one extra level of risk in there. And don't worry, I produced a graph for you as well. Ta-da! Now, the graphs aren't exactly the same, and let's pick out where the differences lie to try and understand where there isn't consensus. So for the most conservative Wahed portfolio, they've allocated it all to Sukuk. Whereas for the most defensive Simply Ethical portfolio, they have also included some equities in the most defensive portfolio. And then if we look at the flip side, for the most aggressive Simply Ethical portfolio, they still have some Sukuk in there, even though the majority is in equities. But if we go back to Wahed, it's all in equities at that level of risk. One other thing you'll notice is that the gold allocation for Wahed starts small, goes up, and then comes back down again. Whereas Simply Ethical do almost the opposite. They start big, go down to the smallest amount with the balanced portfolio, and then up again for progressive growth. So I'm not sure why they chose the allocation to gold, and I'm not sure why Wahed chose the highest allocation to gold in the middle. You can see they're kind of doing opposites with their gold allocation, and I don't think there is a consensus out there with what the correct thing to do with the gold allocation. But what's the trend here? What's the main thing we're trying to take away is what are they actually doing with your money when you invest it with them? They are selecting asset classes to put your money into which matches your level of risk. The higher the risk you are, the more exposure you have to more risky assets. The lower the risk you are, the more exposure you have to Sukuk. And Sukuk are lower risk than equities, so that's it. So if you have that concept in your head now, in theory, you don't have to use Wahed or Simply Ethical or any other provider because you know what they're doing is they are choosing the assets that match your level of risk, and that's about it. Let's try and see it on another graph just to see it a bit more clearly. Again, we have Wahed up here, the Sukuk decrease in amount as we up the level of aggression, and the equities increase in amount in the level of aggression. I know we already said that, but I made this graph, so I might as well show it to you again. The next piece of the puzzle is what funds do they actually put your money into? Now, luckily for everyone watching, I've already made this nifty table. Oh, wow. I'm in the way of the nifty table, actually. Let me get myself out of the way. Where can I put myself? Where can I put myself? I'll tell you what. Let's just get rid of me. There we go. Let's just look at this table together for a bit. And then let's see what they put their money into. So I've listed some Islamic funds down here on the left. And I've listed Wahid and Simply Ethical. And I've said what funds they use. They've both opted for the Islamic Global Equity Index Fund. They both opted for the HSBC World Islamic ETF. Simply Ethical opted to use the Schroeder Fund. They use different EM funds. Wahid uses iShares. Simply Ethical uses the HSBC one. Wahid includes a European fund, whereas Simply Ethical doesn't. And finally, Wahid include the use of a USA fund, which is a Wahid USA fund, but Simply Ethical don't include any USA fund. I've also listed the fees down here on the side of the different funds that they invest into. So let's go over some points of difference between them to try and understand why Wahid might have chosen some that Simply Ethical didn't choose and vice versa. Firstly, the first word choice is that one of the funds on this table is an actively managed fund. I'm not going to describe what an actively managed fund is. If you don't know what it is, go do your own research and come back. But Simply Ethical use it. It's a Schroeder Islamic Global Equity Fund. Why they chose an actively managed fund with higher fees on it, I don't know, but they did choose it. Next choice. Wahid and Simply Ethical chose different EM funds to invest into. Wahid chose the iShares one and Simply Ethical chose the HSBC one. I don't really understand the reasons why they chose differing ones. Maybe one day we can reach out to them and ask, but it doesn't really make sense. The biggest point of confusion, or the biggest thing that doesn't really make sense, is why Wahid would add a USA fund. Now, before I go on to why Wahid would add a USA fund, USA as a country occupies the largest space in terms of its economy to the rest of the world. Therefore, when you're investing across the globe, USA is naturally going to have the largest allocation as to where you invest your money. So when you invest into a global fund, that global fund typically has a huge allocation to the US. If you go back to our funds here, all of these global funds here have about 70 to 80% allocation in the US. And because they have such a high allocation to the US, technically you don't need to add more of a USA fund, which is why Simply Ethical don't have a USA fund. The world funds are typically under-allocated to emerging market stocks, which is why Wahid and Simply Ethical both rightly, in my opinion, add a emerging market fund. Wahid opted to add a Europe fund. Don't know, no comment there. But adding a USA fund, for me, the only reason Wahid would add a USA fund to this list is because it's a Wahid fund and they charge 0.55% fees on it, which helps them get higher fees. One reason I would push that narrative, and I'd say it's quite true, is because both iShares and HSBC have USA funds and both of them have fees of 0.3%. So the fact that Wahid went out and chose the fund with the highest fee of 0.55%, which just so happened to be their own fund, is a little bit disingenuous to me. But it is what it is. I mean, they're a business, they're out there to make money. They allocate people to their own fund. I think this reason here is probably one of the main reasons I don't use Wahid. I don't like this allocation to the Wahid fund. But if we just stop here for a second and think, we can see exactly the funds that Wahid invests into. And I'm telling you that you can buy these exact funds on other platforms. So now the question is, do other platforms charge lower fees than Wahid, or do they charge the same fee as Wahid? Because if you can recreate exactly what Wahid do on another platform cheaper, why don't you just do it on another platform? So I've pulled up here the pricing of Wahid, and you can see the annual Wahid fee is 1% per year. That's how much Wahid charge you as a platform. And on top of that, you are charged the fees for the funds that Wahid invests into, which you cannot escape. You have got to pay those fees in whatever platform you invest into those funds on. So that is going to be uniform across everywhere, as is the annual market spread. So what we're looking at really only is the annual Wahid fee, which is at 1% per year. And that's just when you're investing 3,588 or less. When you're below that, they're charging a fixed fee of £35.88 a year. So if you're only investing £100 into Wahid, it definitely doesn't make sense, because you can see they're taking at least £35.88 per year, which is going to work out to 35% of your investment. That's why for small investment amounts, Wahid doesn't make sense. Even £1,000 invested into Wahid, they're taking 3.59% a year, because they don't take less than £35.88 per year. That's why I kind of set the bare minimum The bare minimum of what to use with Wahed is £3,588 at least, because that gets you to that 1% fee. Again, it doesn't really matter for the Wahed fees what portfolio you choose. You can see the only thing that's changing is the annual investment funds cost. The Wahed fee is the same. The annual investment fund cost changes obviously because when we looked at the portfolios before, they were invested in quite a few different funds, and every fund has its different fees. So they're just averaging the fees out depending on the cost of the funds. So if you keep that number in your head, the 1% Wahed fee, let's try and discuss how much those fees are actually going to cost you for real, over the long term. And let me get rid of myself now so you can see just the screen. And you can see the difference 1% in fees is going to make over 1, 5, 10, 15, 20, and 30 years. So we're talking about 7% growth here on £10,000 invested. One of them has a 7% growth rate and the other one has a 6% growth rate because we're taking away 1% in fees. And you can see the first year it doesn't matter much. It's just going to cost you £100. But the fact that the 1% is being taken away and therefore not being allowed to compound over the long run is what causes the difference in values over the long term. And if we just skip down for the case of keeping it quick, over 30 years, the difference becomes around £20,000 just because of that 1% fee. It's not like Wahed is taking more money off you, even though 1% of 76k is £760 they're taking off you a year. But the reason for the big divergence in what your portfolio is worth is because you're losing the growth that 1% fee would have had. Remember, this extra £100 here has had 30 years to grow at 7%, whereas it never grew here because they took it away from you. Now, some fees are unavoidable when you invest, so don't stress out too much about paying fees. There's always going to be fees. The key is kind of keeping those fees down and keeping them down to a minimum. So now the question becomes, is there a way that you can invest into the funds that Wahed do, the funds that Wahed invests into, or the funds that Simply Ethical invests into yourself with no fees? So yes, you can buy every single one of the funds that Wahed invests into or Simply Ethical invests into yourself on a platform which does it for free. And let me just get myself away from here so we can go through them one by one, and I'll tell you the platform where you can buy them for free. So every single fund on this page is available on Trading 212 and you can access it for free apart from one, which is the top one, the HSBC Islamic Global Equity Index Fund. And if you want a website where you can buy that fund for free, remember, we're not talking no fund charges, we're just talking no platform charges. So let's try and load up a website now that has that one for free. Prosper, FCA regulated platform. They offer ISAs, they offer SIPs. It's a full-on, real platform. And you can click here where you see the fees. 0 fees for the platform. That's the main thing you're looking for. Obviously, there are going to be fund fees. As I said before, you can't get around that. Here we are on Prosper, and you can see the full list of funds they have. And remember, I told you they have 0 platform fees. You just find the HSBC Islamic Fund. Here it is. They have the HSBC Islamic Global Equity Index Fund, where the fees of the fund are 0.63%. So yes, you can combine a Prosper account with a Trading 212 account to copy exactly what Wahed does yourself. So that's why I don't use Wahed myself. Now, having said all of that, having said everything that I've said, is Wahed still useful for a lot of people? Yes, it is. Why? Just because it's hassle. Knowing which funds to go for, thinking about what the right allocation to each fund should be, and even thinking about monitoring your accounts and even rebalancing. So sometimes some funds outperform other funds and then you might have to go back and rebalance. But if you can do a bit of education around that space, you can save yourself those 1% fees. But do I dislike Wahed? Not at all. I think they provide a very good service for those who don't want to educate themselves around investing. And just to go back to this screen again, remember, Wahed make choices and Simply Ethical make choices about their funds. I disagree with both of them about the funds that they chose. I would not have chosen, again, I would not have chosen that Wahed fund. I would not have chosen the iShares EM fund that Wahed choose. But, investing is not completely a science. Sometimes it's a little bit of an art as well. So who's right, who's wrong? Yeah, maybe I'm wrong. But hopefully you've learned a bit more about Wahed now. If you liked it, tell us why you liked it. If you didn't like it, tell us why you didn't like it. And don't forget to hit that subscribe because we need to get to 1 million subscribers. Yalla, assalamu alaikum. Hope I didn't bore you too much.